In 2015, I received what I thought was a prank phone call. The CEO of my biggest competitor wanted to meet. My first instinct, hang up and pretend it never happened. But that prank call led to a partnership that boosted our revenue by 400% in 18 months. More importantly, it transformed us from commodity providers fighting for scraps into luxury market leaders, commanding premium pricing. I'm David White, and what I'm about to share with you challenges everything you've been told about competition. If you stay with me for the next few minutes, you'll discover the 8 partnership multipliers that don't just grow businesses, they build empires. You'll learn while 70% of global trade flows through partnership, how Microsoft generates 95% of its revenue through its strategic alliances. And most importantly, the exact framework I've used to help clients ascend from price-sensitive markets to luxury tiers where margins matter more than market share. So grab your notepad because we're about to turn your biggest threats into your greatest assets. So let me start with a counterintuitive truth that most CEOs miss. Your biggest competitor could be your fastest path to premium market entry. Reid Hoffman, LinkedIn's founder, said starting a company is like leaping off a cliff while building a plane. But here's what he also noted. You can share parts with others jumping from the same cliff. The data backs this up in ways that might surprise you. Forrester research shows that 75% of world trade flows through partnerships and alliances. Strategic partnerships contribute to 28% of high maturity companies' revenue, and that's compared to just 18% from paid search advertising. Microsoft, 95% of their revenue flows through partners, not 50%, not 75%, 95%. But here's where it gets interesting for premium market entry. Companies with structured alliance management achieve 80% success rates, whilst those taking ad hoc approaches only achieve 20%. The difference isn't luck, it's strategy. Most CEOs build moats around their businesses. The smartest build bridges to premium market segments through strategic competitor collaboration. This isn't about playing nice. It's about accessing ultra high net worth customers and positioning your brand in the prestige tier. Now, let me share the 8 partnership multipliers that turn strategic alliances into empire building engines. Multiplier number 1, the competitor collaboration paradox, where you transform market threats into luxury assets through strategic alliances that elevate both brands to prestige positioning. This isn't about merging, it's about mutual elevation. Multiplier 2, the expertise exchange economy, share domain specialization to gain access to affluent customer networks and premium distribution channels built over decades. You're not giving away secrets, you're gaining access to markets. Multiplier 3, distribution amplification engine, access established trusted networks serving discerning clientele who value relationship-based recommendations over mass marketing. Think Cartier partnering with luxury hotels, instant credibility transfer. Multiplier 4, the risk redistribution model. Share investment risks while amplifying upside potential in high-stakes premium market entry. 2 companies can afford to test luxury markets that neither could access alone. Multiplier 5, the credibility transfer protocol. This is where you leverage established authority and industry recognition to fast-track your brand's entry into luxury market segments. This is how unknown brands suddenly appear in Forbes and the Wall Street Journal. Multiplier 6, the innovation acceleration catalyst. Transform partnership meetings into treasure troves of cutting-edge ideas and bespoke product innovation for discerning customers. When expertise combines, innovation explodes. Multiplier 7, the market intelligence network. Use strategic partners to gain early insights into emerging luxury trends and ultra high net worth customer behaviors. It's like having a crystal ball for premium markets. Multiplier number 8, the compound growth generator. Build systems where each successful premium partnership becomes a stepping stone to even more exclusive, high value relationships. Success breeds access to higher tiers. Let me bring this back to that Starbucks meeting in Manchester. When I sat down with my competitor, we weren't discussing market share or pricing strategies. We were exploring how we could create an entirely new category in our industry. Within 6 months, we developed a luxury service tier that neither of us could have offered alone. Our combined expertise, distribution networks, and credibility created something unprecedented, a premium offering that commanded prices 300% higher than our individual services. The result, we didn't just grow revenue, we ascended to an entirely new market tier where price sensitivity disappeared and customer loyalty became generational. As clients started referring us to their peers, not because we were cheaper, but because we were exclusive. This is what happens when you move from competing for market share to creating new luxury market categories. While competitors fight over price-sensitive customers, you access affluent segments through collaborative relationships that elevate everyone involved. Now, the 8 multipliers I've shared form the foundation, but premium market entry requires sophisticated execution. What I haven't covered are the advanced strategies that separate successful partnerships from costly failures. There are 4 fatal partnership patterns that cause 70% of luxury market partnerships to fail. There's a premium partnership success protocol for evaluating, negotiating, and implementing high-value alliances. And there's the partnership architecture framework for engineering approaches that maximize prestige positioning. Having built several 7-figure businesses through premium partnerships, working with luxury brands like Cartier and enterprise clients like Adobe and IBM, I've learned that practical strategies consistently outperform theoretical frameworks. The difference between competing for market share and creating new market categories lies in strategic partnership execution. This isn't about sharing profits. It's about expanding into premium territories where margins are higher, customers are more loyal, and your brand commands respect. If you're ready to transform your business from commodity provider to luxury market leader, I want to continue this conversation with you. First, join me over at Substack, the authority figure, where this conversation continues, and you can find premium levels of additional content. And you'll find the link in the description. It's theauthorityfigure.substack.com. Or, if you want and prefer personalized guidance for your premium market entry, book a complimentary authority assessment call with me personally. We'll explore partnership opportunities specific to your opportunity and growth objectives. Limited slots are available and they ensure focused, valuable discussions. And you can book that over at Calendly. The link, again, is in the description. Remember, strategies I've developed through 4 decades of premium market experience can accelerate your journey to the prestige tier where true wealth is built. The returns can be significant even if you implement just one of these suggestions today. Your competitors are waiting. Your premium market entry isn't. I'm David White. Transform your threats into assets, and I'll see you at the top.